Good morning, everybody. It's Wednesday, January 8th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at March corn down 2 at 456. March soybeans were down 2.5 at 994 3/4, and March Chicago wheat was down 6.5 at 536. Now, this morning, the USDA, we had an export sales announcement of 120,000 metric tons of soybeans to unknown destinations for 24. Good morning, guys. Ben, what's on your mind? We're going to have export sales tomorrow morning, and then also tomorrow we've got a shortened market for the National Day of Mourning for President Carter, followed by Friday's WASDE report. So a lot to shake out here still for the end of the week. What are you thinking about?
Well, I think you've got those things, and we need to get the report out there. Certainly worried about geopolitical risk as we get closer to the transition of power to the new president. There's some pretty crazy stuff coming out of his mouth right now. Certainly you have to take it somewhat tongue-in-cheek, but he has vacillated back and forth on how some of the economic policy will be. So I guess we just have to wait and see on that. The other big thing that I think today is the beginning of rebalancing. And that's a period where index funds that participate in commodities move their positions around, not unlike 401k type of programs where they shed really good performers and get into some poor performing things over the last year. That puts greens in a place where they should be bought. Some pretty good estimates out there. I think they're moving all the time, but it used to be a really good trading opportunity, but I think it's a little bit oversubscribed now. I think there's probably a lot of people that are waiting for it. You saw yesterday some buying kind of midday. I think they set themselves up for it. But that does bring in a certain amount of volume, and the people that get in front of this trade can be wrong. So it does bring a certain amount of volume, and so I think that's worth watching as well. But you got risk in both directions here with super low volatility. I think it's one of those places in time where you could look back and be regretful if you don't address the risk that you have in either direction.
Now, very good. Our friends this morning at Bourbon Brown are giving us a little update on weather down in South America. Says the expected rains for the 3 Brazilian southern states next week, and rains today and tomorrow for Cordoba. Forget about the talk on dry weather. So you can tell his opinion there. And then Justin, maybe a few comments. Just looking out forward, I guess, we've seen some strength in the bean complex. We're still above $10. Maybe just some of your thoughts there as we look at the market.
Yeah, I think we've been talking about this a couple of times this week. The weather forecast changed over the weekend to where the kind of the 10-day, 2-week weather looked to start getting wetter, and talked about that being a risk. So the bean market makes a lot of sense. We went and made lows, put some premium back in the market with Argentina turning kind of hot and dry. That premium's leaking out as we get closer to those forecasts and rains. So won't fall apart till we actually see those verified probably. But the problem is, as we talked about several times now, is that the Brazil crop looks like it's gonna be really big. So I still think the chance of a global bean supply being burdensome is pretty high. And I think we've covered a lot of shorts. The funds have covered a lot. They've gotten really long corn. They're covered most of their shorts in beans. So to Ben's point, there's equal risk here for some big moves. So yeah, I would be on the kind of bearish side of beans. Obviously, we have to see what acres end up being in March. That's a long ways from now. I think there's going to be headwinds in beans as we get closer and closer to starting to harvest the South American crop, the Brazilian crop. I mean, we'll be starting by end of January, early February in many areas. And I think we've seen that in the export market here. That's starting to lose premiums. We're not that competitive. So yeah, I think the bean complex has a problem. I've talked exhaustively about maybe the one shining star being soybean oil. But that doesn't mean it has to really go up. It could just improve against other oils globally. I personally think it will appreciate, but that's not enough to drive the whole bean complex. So yeah, I think the rally that we've seen, that might be it. If the rains do verify and we get good rains in South America, it might be hard to make much bigger highs than we just saw, in my opinion. At least
without some sort of a major surprise on Friday, and it's hard to bet on those.
Yeah. Obviously, things can change, instantly, but right now it'd have to be a pretty big change, I think, to dramatically shift the global balance sheets for beans. Corn, we talked about that too. It's friendly. I think the big bearish fundamental hanging over is what our acres going to be. Are we going to get a whole bunch more bean acres here? We still have to prove the safrinha crop, which we've talked about a ton. So a lot more can change in the corn balance sheet right now than beans. Weather-wise, if you're talking about South America, right? You got way more time to have to prove the safrinha crop. You're really close to beans. So I think the market's relatively priced there, and we talked about this yesterday. It really is going to depend on, what those conversations with bankers are, how farmers sit. So I think there's definitely risk in the corn market, even though it is, the more friendly of the three commodities, just because of the financial situation that we're sitting in. So I think that's just something to be very cognizant of going forward.
Sure. Dustin, what's on your mind this morning?
Report on Friday. Just some key things to think about, the stark differences from last year. Our DS1 stocks last year were 12.17 billion bushels of corn. We're talking about just less than 25 million bushels. From that number is our average analyst estimate. Yet, we have some guesses down in the 1.6, less than 1.6 carryout when we were 2.1, above 2.1 last year in the Jan WASD. So there's obviously a lot of signs of tightness in the market, a lot of signs of demand. But one simple stock surprise could kind of maybe rock the boat a little bit here when everyone is pretty bullish on corn supply, or on corn tightness going into this report. If we end up closer to that like 12.3 stocks number, I think the implications that funds are extremely loaded up on the front end of the market. They're bull spread markets, very bull spread. We still don't know how much needs to be moved and sold in the first couple months of the year. So I think that might be one of the bigger surprises. I'm not saying it will happen this way, but if it did happen, that we found higher stocks, the market might be a little bit tilted too far on that side of the boat, and that might be where the risks are. So a lot of bullish cues other than that, but I'd say that's where I'd hang on to my hat. If I had a lot of old crop corn risk, I'd be worried about it going into this report.
Oh, very good. Anything else to add on the grain side, guys?
Yeah, all I would say is, looking at where spreads are trading, there could be a correction that might really catch people off guard if this report doesn't give corn something to chew on, right? I still think that growers are going to have to sell corn. Long lines in the East, everywhere it's moving, basis is fading, and I think you get past the report, and we're going to have to see, end of week 2, 3, 4 in January. There's a lot of talk in October and November. Were corn exports, were they front loaded out of concern? And people argue this back and forth, and no one really knows until you get to the time frame. And if it starts to dry up, I still think that's another thing that makes corn vulnerable. If we see continued purchases on breaks, then I think we're in good shape.
Yeah, just to add to that, I agree with all that, and like I said, I'm kind of in that same boat. The flip side of the coin is if stocks came in the other way. If the spreads are telling us something, if stocks came in the other way, if production came down, all of a sudden you're in an uncomfortable position for corn. and you really put a lot of onus on the safrinha corn crop. So you could start, really getting above some of these moving averages. Also, new crop corn looks like, hey, maybe we need to buy acres. Maybe we need to get above cost of production. Maybe we need to ensure that the farmer's going to spend this money to grow an expensive crop. So you could, that's why this time of the year is really interesting between this report and, March 31st report. That's why, low option volatility, I think these things are mispriced for what the potentials are. So I think, being smart with how you use your money to navigate that is important. But I think on the positive side of things, I think it's creating opportunity. So I would just add that in there.
Sure. I mean, it wouldn't suck to see a nice pop in February and get that crop insurance price somewhere where we can, again, go buy up some really good policies ahead of the season,
Yeah, lots of things. And I, as a trader, you couldn't pay me to be short these cheap vols right now this time of year.
Yeah.
So.
Yeah. Oh, very good. Right. We're got a couple minutes here. Nearby live cattle futures post fresh highs for the last 4 sessions, which is just been an amazing run, but totally different story in the hogs. So what's your thoughts this morning?
Yeah, definitely moving in the opposite directions for sure. I mean, the cattle story is still pretty good. Packers have still been paying up. It seems like the last few dollars here in cash, probably more weather related than anything else. We are starting to see, I think some rumors here that the U.S.-Mexico border may start opening up here on January 20th. So, you had a little bit of a mixed beef market yesterday. So you're starting to see a little bit of give here, I think, to some of the narrative. I mean, there's no question that everything's still on the tight side of the market, but we're going to get some verification. There's some really important reports coming up just in the next several weeks. Got cattle on feed on the 24th, and then you got the inventory report on the 31st, and we've got managed money record long feeders. We've got a massively long position in the live cattle right now. So I know that the story is really good, but there's some real risk coming up here, just in case anybody's on the wrong side of the market. So it's a really important time frame, I think, just to make sure that you got a little bit of protection where you kind of need it, just because those risks are there. And we know what happens if you get some really bad news and you've got record long positions in the cattle market. Usually it's as they say, an escalator on the way up, elevator on the way down. So we'll see how that shapes up. But like I said, there really isn't too much bad news here. I think the cash market is still pretty optimistic here, and especially over the next week or so. But we'll see how that kind of shakes out. There hasn't really been any early indications. And hogs, yeah, you just can't get a good story in hogs right now. It just continued liquidation from the managed money. Carcass was up a little bit, but cash was down. So it just seems like, once again, we're in a position where the managed money has a little bit too much on the table here right now, and they've been slowly kind of working their way out. So still carrying a big long position, and we are getting into the Goldman roll. So it'll be interesting how that shakes out. So I'd expect a little bit higher of a volatility, over the next few days here in that market. But right now the trend is negative. We are starting to get into that oversold position. We are hitting some very crucial longer-term moving averages in hogs. So we could find a little bit of support here, but overall the direction has just been more of a liquidation kind of break.
Very good. Appreciate the update there, guys. Appreciate everybody that tunes in on a daily basis as well. If you wouldn't mind, throw us a like and subscribe. It'll keep you up to speed on everything that's going on with AgYield. Again, a couple of administrative notes here. Tomorrow we will have a 12:15 Central close for grains, day of mourning for President Carter, and then export sales will be out tomorrow morning at 7:30 Central. So we'll take a look at export sales and visit about that there in the war room. Let's see here what much time we got here. We're coming into the open pretty close. Looks like we're going to open pretty much in line with where we finished overnight. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com. Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.